You ever hear of a crypto project that gets kicked off the biggest exchange in the world? And then in price? No, this isn't a meme or a glitch. This actually happened. And not just a little bump either. We're talking about Alpaca, the DeFi token that stunned the entire crypto space in April 2025, soaring over 2,000% right after Binance announced its delisting. This wasn't just a price pump. It was a digital earthquake. A wild mix of short squeezes, market manipulation allegations, whale strategies, and community chaos that made traders millions and left others speechless. So how does a token go from nearly worthless to top trending overnight? Why did it rise when everyone expected it to crash? And most importantly, what does this tell us about how crypto really works behind the scenes? Let's pull back the curtain on the Alpaca phenomenon. To understand this madness, you first need to know what Alpaca actually is. It's the native token of Alpaca Finance, a DeFi platform built on the Binance smart chain that specializes in leveraged yield farming. Basically, it lets users borrow assets and farm with leverage, amplifying gains or losses. It's been around since 2021 and had its ups and downs like many altcoins. But on April 24, 2025, Binance dropped a bombshell. It would be delisting Alpaca along with 3 other tokens, citing standard compliance reviews. Now normally when Binance announces a delisting, the price of a token tanks hard. It's the equivalent of getting booted off Amazon if you're a product. But Alpaca said nah and did the complete opposite. Let's talk numbers. Right before the news, Alpaca was trading around 4 cents, nearly forgotten. But within just 3 days, it skyrocketed past 30 cents. Then, in a jaw-dropping move, it hit an intraday high of $1.21 on April 30th before sliding back to 48 cents later that day. That's a surge of more than 2,000%. For comparison, the other delisted tokens like Wing and VIB, they collapsed, just like you'd expect. So why did Alpaca go vertical? Enter the short squeeze. Here's the simple version. Traders thought Alpaca would crash, so they shorted it. That means they borrowed the token and sold it, expecting to buy it back at a lower price to profit. But instead of falling, the price started climbing. That's when panic sets in. Those same short sellers were forced to buy back the token at higher prices to avoid liquidation. And that massive wave of buying only pushed the price even higher. Ex-user at Onchingquant called it the mother of all short squeezes, and the numbers back it up. Around $79 million in open shorts against a market cap of just $15 million. Think about that. The bets against Alpaca were 5 times bigger than the project itself. Traders were getting liquidated left and right. According to Adash Crypto Real, over $300 million was wiped out in short positions in just days. Trading volume on Binance spiked to 12 million tokens a day, 4 times the average. But here's where things start smelling fishy. Because a move like that, it doesn't just in an orderly market. The crypto community quickly started calling out what looked like. Posts from @pharmacist_eth called it the worst crypto price rigging they'd ever seen, with the token swinging from 2 cents to $1.27 in hours and then back down again. Others, like @Amit0tsik, claimed it was textbook price manipulation designed to trap shorts and extract massive profits. Then came the whale theories. Some traders noticed that large wallets started accumulating Alpaca around April 19th, before the delisting announcement even dropped. If true, it suggests that some insiders may have known what was coming and prepared to profit. Chaincatcher reported that whales possibly set up a short squeeze script, loading up on Alpaca, waiting for shorts to pile in, then spiking the price to force liquidations and walk away with a massive bag. That theory gained more weight when Coinformania published a piece hinting that market makers, possibly hired, helped manufacture the pump. The timing, the volume, the liquidations, it all fits the profile of a coordinated play. And while some argue Alpaca's fundamentals were improving, including lower reliance on Binance and better revenue, it's hard to ignore the manipulation signals flashing across the board. Meanwhile, the community lit up like fireworks. Some users, like at 0xMikado, joked about the absurdity of the situation, calling it a funny outcome of a dead token rising from the grave. Others shared stories of massive profits. At Iatjeet said their friend made 7 figures riding the squeeze, but there was also a strong wave of caution. Influencers like at Wise Advice Sumit warned this was one of the clearest signs of market abuse they'd seen. At Coinank_com described it as a meme-style black swan, emphasizing how unpredictable and dangerous crypto markets can be when whales are involved. And that brings us to the lesson in all of this. Crypto is still the Wild West. A delisting, which normally signals the end of the road, can unexpectedly become a launchpad if the right conditions and players are present. A short squeeze can wipe out even seasoned traders if they're over-leveraged or betting on the obvious. And in low-cap, low-liquidity tokens like Alpaca, even a handful of big wallets can shift the entire market. So if you're trading altcoins, remember, volatility is the game and survival is the goal. Don't blindly short, don't blindly follow hype, and for the love of your portfolio, always set stop losses. The Alpaca saga isn't just a story of a token that pumped, it's a warning shot. It shows how price action doesn't always reflect fundamentals, how whales and market makers can bend the market to their will, and how important it is to recognize the difference between a true rally and a setup. So what do you think? Was this just market dynamics playing out, or were strings being pulled behind the scenes? Let us know in the comments. Smash that like button if you learned something new, and subscribe for more stories from the bleeding edge of crypto. This was the Alpaca phenomenon, and trust me, it won't be the last one.